Hi, this is Ken. Starting today, I'm launching something new on this channel. Up until now, I've mainly focused on Tesla news, but from here on out, every Tuesday will be Chart Analysis Day. On Tuesdays, we'll take a deeper look at Tesla's stock price using AI-driven technical analysis to better understand where we are in the market cycle right now. The goal here isn't to trade based on emotions or personal bias. By using AI as a third objective perspective, I hope this can serve as a second opinion for your own investment decisions. And for this very first episode, the timing couldn't be more intense. Tesla was just pushed back right before the $500 level, and now the chart is at a critical crossroads. So the big question is, how should we position ourselves from here? Let's start by looking at where we are right now. Tesla peaked near $498 in late December, and since then, the stock has been in a corrective phase for about 3 weeks. Currently, price is hovering around the $445 level. After getting so close to $500, it's natural that we saw some profit taking, but what really matters is how the chart is behaving underneath the surface. This brings us to MACD, an indicator that shows trend momentum. On the daily chart, we can see a death cross at high levels, followed by an increasing distance between the two MACD lines. That widening gap is important. It suggests that this isn't just a short pause or sideways consolidation. In the short term, downward momentum is still active, and selling pressure may actually be accelerating rather than fading. Next, let's check the RSI, which helps us identify overbought and oversold conditions. Right now, RSI has fallen into the low 40s. Just a few weeks ago, when Tesla was approaching $500, RSI was above 70, clearly in overbought territory. That excessive heat has now been completely worked off. However, RSI has also dropped below the midpoint of 50, which places the stock in a bearish momentum zone for the short term. So the key question becomes, how far could this pullback go? The most important support zone right now sits between $430 and $440. This is the market's main defensive line. If Tesla holds this area and starts to show signs of a rebound, that would be constructive. But if this zone breaks decisively, the next psychological target becomes $400. That's why this week's price action is so critical. It could determine the next major trend. There's another major factor investors need to keep in mind. Tesla's Q4 earnings report is scheduled for January 28th, 2026. Right now, the market is in a waiting mode, balancing optimism and uncertainty as it searches for a bottom ahead of earnings. From a technical standpoint, with MACD divergence still expanding, RSI remaining in bearish territory, this may not be the ideal moment to go all in aggressively. A more disciplined approach could be waiting to see if price clearly holds the $430 support, or watching for signs of momentum recovery, such as the MACD histogram beginning to turn upward. At this stage, the most important skill may simply be patience. Let's wrap this up. In the short term, Tesla is still experiencing strong downward pressure, but importantly, the long-term uptrend has not been broken. This week's key focus is very clear. Can Tesla defend the $430 support level? Next Tuesday, we'll revisit this chart together with AI once again to see how this critical zone held up and how the setup is evolving ahead of earnings. Make sure to subscribe so you don't miss the next update. And now, I'd love to hear from you. Do you see $445 as a buying opportunity? Or do you think it's better to wait patiently for prices closer to $400? Share your strategy and thoughts in the comments below. I read every single one. Thanks for watching, and I'll see you in the next video. P.S. Today, I tried something new for the first time, AI-based chart analysis. I'm thinking of doing this at the beginning of each week, every Tuesday going forward. To be honest, I feel today's video is still far from perfect, but I'll keep improving it over time. So thank you for your understanding. My approach is always to start by doing, then learn and improve along the way. I plan to keep refining this chart analysis format as well.